You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 2nd day of February, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. If you happen to be listening to this broadcast as a podcast on iTunes or iHeartRadio or Spotify, wherever pods are cast, if you want to be able to see the charts, all you got to do is hit pause on the podcast player, go to youtube.com/CFRN. Not only do we stream live there each and every day during this broadcast, but we've archived over 1,600 daily shows. So there's a little something for you in each and every one of those broadcasts. Obviously, you can't watch them all, and When you do go back to watch some in the past, because there are teachable moments in each broadcast, you can always fast forward. You can fast forward past the intro to where Michael's doing a recap of what happened in the room today. And then you can fast forward a little more. You'll see me take the charts, go to the daily, go over all of the Concierge Trade Alerts, the Logic 247 alerts. And as I go through the alerts and talk about them, I'm explaining a lot about how markets work. In essence, we're price action traders. The indicators that we've put together basically help someone who's new to the markets actually see what price is doing, color-coded for your convenience. Now, even though I've been watching these same charts for a very long time, I wouldn't think of trading without the indicators. Again, we're trading price action, but the indicators just make it so much simpler to understand what's going on, and it really helps you to know what the next high probability move is. So, for your listening pleasure, podcast, for your viewing pleasure, youtube.com/CFRN. Okay, let's open with a word of prayer. Heavenly Father, we thank you for today, for your blessings, for your mercy, and for your grace. We thank you that every seat in this broadcast has been filled, and for each mind and heart that fills the presence of this virtual room, we thank you. Only you truly know what we're setting out to accomplish today. We have an idea, a vision, hence daily instructions. We have talents, abilities, and time to work. However, we realize, God, that only you can see in perfect detail the end of every beginning, every project, every season, every life. Nothing is ever in vain, for even mistakes and missteps are used for the good of those that love you and are called according to your purpose. Your righteousness transcends all our efforts and understanding. Forgive us for any time that we get caught up in pride. The pride that puffs us up and the pride that threatens to unqualify us. Strengthen our confidence in who you have made us to be. Set us free from comparison with others, that we might work together efficiently. And we ask that you bless this broadcast today, all those present, as well as the lives of those we will encounter after the fact. Heavenly Father, ready us to make every moment count. In Jesus' name we pray. Amen. Okay, happy Tuesday. Let me give you the numbers from around the world. These are the cash markets, the indices. Currently the Dow's up. You ready for this? Big day on Wall Street. All right, the Dow is up 615 points, a little over 2%. NASDAQ up 216, 1.5%. S&P 500 up 67, that's 1.75%. And the Russell 2000 did some catching up since I spoke about it in the live training room. The Russell is now up 24 points. That's a little over 1%. Anytime that you have all four of the major indices in agreement, all pointing in the same direction, be it up or down, that brings strength to the move. In the commodity basket, crude oil up $1.31. A $1 move in crude when you're trading futures is worth $1,000. So crude up $1.31, trading 54.86 last. That's a gain of almost 2.5%. Gold, on the other hand, down $24.70, trading trading 1839.20 last. It's a drop of 1.25%. Silver down $2.60, trading 26.81 last. Now that's a drop of almost 9%. Sunday night we had a gap higher open on silver, and we filled the gap and then some. We have a double bottom in place on the 30-minute chart in silver. When silver moves $1 and you have one futures contract, a large one, that's $5,000. Pendulum swings both ways, so you certainly want to be on the right side of the street with silver. Silver, I got to give you, a word of caution. It's very volatile, so be careful out there. In the Asian markets at the close, Nikkei posted a gain of 271 points, 1%. The Shanghai rose 28, almost 1%. The Hang Seng rose 355 points, 1.25%. And in the European markets at the close, the FTSE posted a gain of 50 points. The DAX gained 213, which is 1.5%. And the CAC rose 101 points, a gain of almost 2%. And so 2 days back to back, we've got a green day in Asia, green day in the UK, and it's a big green Radio Tuesday here in the US of A. So with that, we'll kick it over to Michael. He'll give us a recap of everything that happened this morning in the live training room. When I come back, we'll go over the Concierge Trade Alerts, the Logic 247 alerts, all that and answers to your questions. And today I'm attempting to monitor both the chat box here in the room and also the chat box over on YouTube. So wish me well. If you're listening via YouTube, you have questions, type in the box. I'll see it at some point and I will answer it for you. Okay, Michael, I can see your charts. It's all yours.
Okay, great. All right, here we go. Good afternoon, everyone. Today is Tuesday, the second day of February 2021. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today, as I just said, is the second day of February 2021. Today we made 9 ticks in crude, 55 ticks in gold, and 29 ticks on the ES. Put us at plus $1,002 on the morning session. Today it took 22 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. And again, we took a total of 23 trades this morning. On the month, now we're at $2,242. That's over 2 business days, averaging $1,121 per contract per 2-hour business day. I've now gone 234 consecutive days of getting my goal. Those are business days. And so far this year, I've gone 21 days. That's because we've only had 21 days so far this year. Oops, so I need to update this one. So on the year now, we're at $16,577. That's over 21 business days, averaging $789 per contract per 2-hour business day. Okay. Now, if you have not taken a free trial with us and you want to, go to the homepage at CFRN.net. Scroll down here to where it says free 5-day trial, no credit card required. Click on that and you'll be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name and your email, okay? And your phone number. And you can tell us your biggest trading challenge so that we can tailor one-on-one training just for you. Now, we don't give this information to anyone. So, if you give it to us, we're only going to use it for you, okay? Mike, I'll answer that question in just a minute. Okay, hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. Okay, and Mike asks, is liquidity an issue after hours trading? The concern is that you'd be getting in a position that turns against you and not being able to get out quickly. Liquidity can be an issue depending what market you're trading. And if you're trading in a really thin market, liquidity can be an issue. If you're trading something like the ES, depending when you're trading, liquidity is usually not an issue. I do a lot of trading at night, at like 7 o'clock at night usually, 6:30 to 7 o'clock at night. is usually pretty good. 3 o'clock in the morning is usually pretty good. 8:30 to 9:30 is usually pretty good. Those are times that I get into the markets at night. And last night was no exception, and we did have some great trade setups. It takes a lot longer for them to develop, but on the ES, which is what I was doing last night, occasionally there'd be a spread between the bid and the ask of 1 tick between the bid and the ask, but most of the time it was between 10 and 20 on either the bid or the ask that you could trade. So there was plenty of liquidity. Okay. All right, so let's get into what we did. Now, gold was what we did most of the trading on this morning. Waiting for my data to catch up here. You see, I have just a few things that I put on my charts. We're going to start out with gold. Is gold what we got to go for today? It is, isn't it? Okay, now it took a little while to get the goal for the day this morning, and I could have gotten it right here. That was a valid trade. This right here was a valid trade. This right here was a valid trade. So I could have gotten it earlier, but I missed all of that for whatever reason. Then I finally did take this trade right here, and I picked up 10 ticks. That was the goal for the day. The next trade was right here. It looks like I picked up 1 tick. Something's missing. Somewhere in here I picked up 1 tick. Then I picked up 2 ticks to put us at plus 13. Then I missed that one. Here I picked up 10 more to put us at plus 23. Here I picked up 2 more to put us at plus 25. 10 more to put us at plus 35. It doesn't look like I wrote it in. Nope, 1 more to put us at plus 36. See all these ellipses or trades that set up that I missed. That would have been profitable. That would have been profitable. That would have been profitable. There was some more in here, I think. Maybe not. YVR trades there were. There was 1 there and 1 there. And 1 there and 1 there. And a mistrade there. A mistrade there that would have been, looks like it would have been a stop out had I taken it. A mistrade here that would have been profitable, 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 profitable. But anyway, the next trade here, we had a break even. Then we had another plus 10 to put us at plus 46. Then a plus 9 to put us at plus 55. And I believe that's where we ended trading on the gold for the morning session. Yeah, it is. Now, there was another short right here, another short right here, both which could have been profitable. Another short right here, which would have been profitable. Okay, and that was gold this morning. So we're the most active on gold, the least active on crude, but still, we did trade crude. Now, my first trade was a break even. Our second trade was a break even. Then we had a plus 2. We missed that one. We had a plus 2 right here to put us at plus 2. Then we had a plus 4 to put us at plus 6. Then we had a plus 3 to put us at plus 9. Since then, crude gave 1 more trade right here. And that was really it for the crude. On the ES, let's go back here. We had a few trades here on the ES. Now let's go back to the beginning. Come on, charts. Okay, so the ES started out here and it gave a couple of trades right at the beginning. We ended up missing all those and we didn't get in till over here. We got a break even trade here. We missed a short trade right there. That could have been profitable. We had another break even trade right there. And finally, we picked up 8 ticks right here to put us at plus 8. Excuse me. We had a mistrade here that would have been a break even for me. A mistrade here that would have given us some profit. A mistrade here and here and here. All could have been profitable, but this one would have been break even for sure. Then as we continued through the day on the ES, right here we picked up 4 ticks to put us at plus 12. Then we had another break even right there. We picked up another 4 ticks to put us at plus 16. Then 1 tick to put us at plus 17. then 12 ticks to put us at plus 29. And that's where we ended the day on the ES. We had a break even right there. And that was it. During the break, it got really choppy in here, and it still is really choppy. Now we have some big earnings coming out after the bell today. So I think the market may be just a mess until then. But with that said, that is what we did this morning. Now, if you've not taken a free trial with us and you want to, go to the homepage at CFRN.net. And right here on the homepage, it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, EminiTradingSchool.com. On this page, all we ask for is your name, your email address, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. And then hit the send button. And once you hit that send button, we'll get a confirmation link. And you'll get a confirmation link, and you must click on that confirmation link. And then we know you took the free trial. Now, the one-on-one training, we're actually taking that a step further now. Before you even ask for the one-on-one training, we want to sort of push you into the one-on-one training and get you set up with all the stuff that you need to do the trading and the training ahead of time, because we have the people coming through the trials, and a lot of times the trial's over and they haven't even downloaded the platform yet. So we want to start your training by getting you downloaded, by getting all the charts and everything that you need running on your desktop ahead of time. Okay, so that's where we're going at this point. All right, so that said, we can jump back here one more time to the spreadsheet really fast. And again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 2nd day of February 2021. I don't know why that doesn't say 2021. Anyway, today we picked up 9 on crude, 55 on gold, and 29 on the ES. Put us at 1,002.5 on the morning session. That is one contract, 2 hours per day. And we missed a bunch of trades, as you can see. And today it took 22 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades. So on the month now, we're at $2,242. That's over 2 trading days, averaging $1,121 per contract per trading day. We've now gone 234 consecutive days of getting our goal, and so far this year at 21. On the year now, we're at $16,577. That's over 21 trading days, averaging $789 per contract per 2-hour trading day. Okay. And with that, before I actually lose my voice, I'm going to pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, Dwayne's not ready yet. So let's look over at the ES. You see how we just broke out of all the chop, and it's looking on the short side. It's got a pullback area right now up at 33.75, 33.5. But it wants to get down to 38.28. So if we get a pullback here, what were those numbers I just gave you? 33.5, 33.75. That would be right up here to the YBR. That's going to change things down here if it pulls back that far. Now we've broken dynamic support here, so we have the space in between these. So if we get a pullback, you can ignore these dots. If we get a pullback, then we'd be looking for a move down to 38.28. if it happens, okay? Gold right now just broke dynamic resistance, and that wants to get up to 39.7. Pullback area on that is 37.7. So the pullback area on gold is all the way down here to the YBR. I'm sorry, to the BBC. It doesn't look like we're getting the pullback there on the ES yet. 38.28 is where that's trying to go, but it's a little stronger on the upside. So we should get a pullback on the ES. And the gold, oddly, well, it's a little stronger on the downside, but it keeps flipping back and forth. So we're looking for pullbacks on both of those markets. Crude is kind of a dog right now. It's not really doing anything. It's stronger on the downside. If you get a signal to move down, the crude wants to get down to 54.66. Okay. So we just have to wait because nothing is setting up right here just yet. All right.
Okay, I'm letting you know I'm back. I think I probably missed my call.
Oh yeah, you did. But okay. I was just going about what's happening. But yeah, you can grab it if you want to right now. What did I say on 3828 on the
Okay, I had
ES?
to take my headset off for a minute, so I missed whatever it was you just said.
Oh, okay. So you can take them back if you want to right now.
Recap of the recap.
Today it took 22 minutes and 1 trade to get to $100 per contract. 22 minutes and 1 trade.
Good job. Now, those of you that follow the discussion group, I posted last night. I wasn't aware of this, but there's like the hottest new startup in Silicon Valley. It's called Clubhouse. And you can't just join. There's a waiting list. So I put myself on the list last night. And then this morning, or just now, I got this text message. Orville Thompson moved you to the front of the wait list, and your Clubhouse account is ready. We're so excited for you to join. Use this link to get started. So, we're running with the big dogs. Now, as I was going through the setup process, it says that I'm allowed 2 invitations because this is an invitation-only type of a thing. Hasn't been rolled out to the general public yet. But people like Elon Musk are on there, you know, different people who have huge followings, etc. So I have 2 invites. If you have an interest in being one of the people I invite, then in the discussion group, let me know and tell me why you want to join. And I think it would be someone who has something to share. Doesn't have to be about trading either. Maybe you are part of a local theater group, or maybe you're a sport fisherman. Okay, just tell me you're interested. Tell me what you think you might be able to bring to the Clubhouse community, and then I'll make a decision, not on whether I like you or don't like you, but if I think what you have to share would be interesting to a large group of people. Now, what was weird is I tried to register as CFRN to get last night, because all you could do last night was just get on the waiting list. CFRN was already taken. CFRN, the number 1, was taken, interestingly. And so I went with Emini Futures. And I think one of the reasons that they may have put us to the head of the line was because perhaps there's no one else in Clubhouse yet who is dealing with that specific topic. I don't know a lot about it. I was just reading an article last night. I have this thing called Flip. It's on my phone and it's on my iPad. And it's sort of like a digital magazine that you get to compile. When you join, it's called Flipboard. That's what it is, Flipboard. So you install the app. It takes you through a list of stuff, and you tell it what you're interested in. And so it works in the background, gathering news from all over the internet, articles, videos, etc., that match the things that you said you're interested in. And so every day when I sit down, like back in the day when we would open the newspaper, remember those days? So it's a magazine type format, it's digital, and there's just things, so I don't have to go out and look on the internet for things I'm interested in. This app brings all those interesting things to me in an easy to read format. And with your finger, you just flip through the pages, and one of the articles they brought back, if you find it of interest, click it, and there it is. So, anyway, moving on. I guess I better take the charts.
Yes, I still have them.
I'll grab them. Oh, I need to change my name so that I can grab the charts. Here we go. And there we go. Okie doke. Almost. There we go. Now I
did respond verbally to Mike, his question, but if you want to show him how to see the volume and all that stuff.
Yeah, I will. I'll do that. It's really based on volume, Mike, and before I start on other things, I'll just bring up Oh, the S&P as an example. Okay, down here at the bottom, I have what Michael just said, volume. Okay, and in DT Pro, you just go Insert, Indicators, Volume, and it puts this. Now these little bitty candles where it looks like nothing was going on, if you hover over them, like this candle is 2300 hours or 11 p.m. Eastern last night, during that 30-minute candle, so that little bar corresponds with that little candle right there. So at 2300 hours, there was, during that 30-minute period, from 2300 to 2330, there was 2,000 contracts traded. And then the next half hour, 3,800. And then the next half hour, 4,400. And as you get to the London Open, which is 3 a.m., look how it jumped to 18,000. So if I go back to 2:30, 4,500. And then here comes the London Open, 3 a.m. Eastern. During that 30-minute candle, 18,000 contracts traded hands. So with the S&P, you never really have to worry about liquidity. The question was, is liquidity an issue during after-hours trading? Now, let's go to a different market. Okay, here's the Dow. And let's go to 11 o'clock last night. During this 30-minute period, 470 contracts. So if you're trading, 1, 2, 5, 10, you're pretty good. Next 30 minutes, 673, 1,000. Now let's scoot over to 3 a.m. London Open. And now at the London Open, it jumped to 3,300. That's 3,300 contracts in one 30-minute period. So liquidity is there. If we go back to the open last night, the opening 30 minutes of the Globex session, 995. And then the next 30 minutes, 810. Okay, so there's your liquidity in the Dow. You can, with any market, just scroll across and you can check yesterday, then you can go back and check the previous day and the previous day. Now let's go to the Russell. Okay, last night at 11:30, 228 contracts, 158, 284. And then let's get over to the London Open, 1,800 contracts traded in that 30-minute candle. So you can do that with crude, with gold, with silver. So anytime you're interested in trading a market, now with the S&P, gold, crude, euro, those are really liquid around the clock. You just never have to, give those much of a second thought. Now, even though that many contracts traded in that 30-minute period, you also want to look at your DOM, your depth of market, by doing this. And I gotta fix mine. Let's go. Okay, here's the DOM. See, I'm only showing one position, so I gotta go into options. And where's the button, Michael, that shows multiple levels? Because I've had the demo chart up, demo platform up, but in the past that has always showed number pad, fonts and colors, scale, histogram. There's a button somewhere. Bert, if you're out there, and if you know which one I need to check. Auto sum bid ask, that gives you the total down at the bottom, like you see on Michael's. Show last volume, auto center. All right, well, I won't waste too much time, but I know there's a button somewhere. I'll find it and show it to you tomorrow. But you've all seen Michael's DOM when he drags it out. And for whatever reason, this one is only showing one level. But typically it'll show 10 levels, and then it sums it up down here. The reason I'm showing you this is, let's say you decided you want to trade the Russell, and you know that in the last 30-minute candle there was plenty of contracts traded. You want to see how they're split up over price, because sometimes people think they get slipped when in fact they don't, because right here you might have 4 contracts available, but you're trading 10. So in order for you to get filled on all 10 contracts, it's got to take the 4, and then the 2, and then the 2, and then the 2 to make 10. So, I mean, yes, sometimes you do get slipped at a fast market, but sometimes if the market is thin, okay, it actually takes a couple of price points to fill the complete order. Okay, so with that said, let us, we got a lot to cover. Now let me find the recap. Valerie just now Valerie just mentioned to me that live has only one level 2, maybe a new data feed structure. Okay, I'll get with Bert and figure that out. Okay, Valerie, I think you just sent the recap over, didn't you?
I sent the wrong thing. Let me get that. Somebody else got our recap.
Okay. Well, good. Now they know too. Let me look. Okay, guys, Valerie's sending me the recap. Let me go ahead and just get the daily chart up. Okay, this is the S&P 500 Emini Futures daily chart. And I think I just saw it come in. Here we go. Okay. Okay. So here comes the recap. So we've had a total of 30 alerts issued since Sunday night at 6 p.m. Eastern. That's when the Globex markets open. That begins the Monday session. And then today's Tuesday, which began last night at 6 p.m. Eastern. Today at 5 p.m. Eastern, the Tuesday session will end. And then tonight at 6 p.m. Eastern, the Wednesday session will begin. Okay, so total of 30 alerts since Sunday night at 6 p.m. Eastern. 11 never triggered. Still waiting on the results of 1. We've had 18 actionable alerts, of which 1 stopped out based on not risking more than $300 per contract per trade, less when possible. In the room, we use an 8-tick hard stop on every trade. Michael is teaching you the trade setup. He's teaching you the very basic underlying mechanical method, the principle upon which markets operate. And we use an 8-tick hard stop on everything. The alerts are based on a 30-minute chart. And on the 30-minute chart, we use market structure to determine where our stop needs to be. The maximum we want to risk is $300 per contract per trade. But using market structure, we can often find, the chart will tell us that we can place our stop at a specific point, and that will be less than 300. It's important that you look at your chart and determine where the chart says to put the stop. There's no reason to risk $300 and get stopped out when you could have risked $200 and got stopped out. You know, over the course of a week, that can really add up. So, only 6%, 1 has been stopped out this week. A typical week is 20%. So let me show you what this week looks like so far. Okay. Now it said we're just waiting on one in the recap. Did I get that right, Valerie? Maybe I didn't get that right.
Well, I'm working on the updated one.
Okay, no problem.
No
rush. No rush. I just. So let me just scroll up to the top of the week. Valerie's still working on the bottom part, but she's got the recap portion done, which I just showed you. So let me just scroll up to the week's beginning. Okay, last week was week 130 of Logic 247. For the entire week, we issued 74 alerts, 13 never triggered. We had 61 actionable alerts. 6 were stopped out. That's 10% of the actionable. But again, last week was not a typical week because it's typically 20% that get stopped out. Now, PTFT. The difference there, each alert, almost every alert, has multiple targets. It's the rare instance when there's only one target. If price doesn't quite make it to the initial target, but it at least gets 60% of the way there, that gives it a PT designation. So the ratio, I posted about this last week in the discussion group. On a tough week, we'll see about 33% of the actionable will get a PT designation, which means it got better than 60% of the way to the initial target. FT means it made it to the initial target and then, potentially the second, third, fourth, whatever the case may be. So last week it was 14.75, which is excellent. So that's an excellent week. A difficult week will be about 33%. And those difficult weeks tend to happen when we're at all-time historic highs and the market gets in one of those sticky areas where we tell you to stay out of the market because our indicators are flat and the market is consolidating sideways, and just when it looks like it's about to run higher, it doesn't. And it looks like it's getting ready to run lower, and it doesn't. So our indicators do a good job of not only helping you to locate high probability, low risk trade opportunities. Once you understand how to read them, they will keep you out of the sideways choppy consolidation that can eat your lunch over and over. So we're now in week 131. First alert coming out of the gate Sunday night was to be short the S&P 3679, the initial target 3677, second target 3675, and the final target is 3665. Typically the final trade to target will be the weekly trading zone below. However, last week we got below the lowest weekly trading zone on the S&P, and the weekly zones come out Monday morning at 6:15 a.m. Eastern since December 14th of 2009. So on Sunday nights we're using the previous week's weekly trading zones. They're still valid Sunday night and they still hold sway over the market into Monday, into Tuesday. As I go to the charts, you'll see the yellow weekly zones are from last week, and the gray ones, excuse me, are from this week. Let me take a drink of something. There we go. Now, the number you see up here in parentheses, that's where the swing high or swing low was at the time Valerie came through to do the recap. Often it will continue in that direction, but this is just a snapshot in time. When the recap was done, this is how far it had moved. So from 79 to 65, that's a 14-point move at $50 a point. 14 times 50, $700. So if you got in at the entry and you got out at this target. Now it kept going, okay? But if you got out at the final target here, $700 per contract trade. If you've earned the right to trade 2 contracts, then it's $1,400. If you've earned the right to trade 3 contracts, then it's $2,100. Getting in here, getting out here. Okay. All right. And so all of this happened Sunday night. No trigger. Russell, no trigger, no trigger. There's a long on gold by 1867, initial target 1868, and then the final trade 2 target, the weekly zone overhead, 1870/71. So that's a $300 per contract move. 2 contracts, $600 move. Gold pays $100 per point. So from 67 to 70, 3 points, $300. Here's silver. Short on the S&P that never triggered. Same for the Russell. Another S&P. Dow. We had a number because the market was dropping Sunday night off the open as we anticipated it would. And then it found a bottom, found support, and headed the other way. That's why these didn't trigger. Here's a long on crude, 52.30 to 52.40. Now, this 52.40 was a weekly trading zone from this week, and so I hadn't published the zones yet, so that's why that is like it is. And then here's another long on gold, 1867 to 1868 to 18. That looks familiar. It is. Important prices, important areas are almost always tested. So when this gold alert went up, triggered, hit the target, price came right back down to the entry, and we were able to trade that again. Our traders understand that important prices, important areas are almost always tested. So I don't always follow up with another alert on the second trigger or the third trigger. But I decided to Sunday night because that's sort of a theme I've been working with everyone on the last few days in the discussion group, where the discretionary trading differs a little from the mechanical model. On the mechanical model, because we're using a fast time frame, as soon as there's 4 ticks profit in the trade, stop goes to break even, because at 8 ticks, you're going to take your profit, okay? On the 30-minute, though, price will trigger once and run, and then more times than not, it will come back, get below the trigger, trigger again, get back below the trigger, trigger again. In fact, I have a good example of that from last night. That's right here. Okay, we had an alert last night, a logic alert, to be long 37.85. So the initial trigger took us up to 37.8775. So 2 3/4 points. So if your goal is 2 points for the day, you got it on that first trigger, first candle. Now, if you didn't take profit, if you moved your stop to break even, then on this candle, you got stopped out. So there was 2 3/4 points on the table. Move your stop to break even, get stopped out. Now, when you're on the fast time frame, I don't want you to say that, I don't want you to think that I'm saying you shouldn't do that on the first time frame. You should do exactly what Michael teaches you in the room on that 4-tick range chart. What I'm saying is if you're going to trade the alerts, use the larger time frame, go from mechanical to discretionary, then you have to take this fact into consideration. So we triggered 2 3/4 points, back below the trigger, triggered again, and this time we ran up to 37.92. So that's 7 points, $50 a point, $350 per contract traded. Then we got back below the trigger again, and on this rally we made it to 37.8975. So the third trigger delivered 4 3/4 points, And then this final trigger, well, it's still cooking, okay? Now, not all triggers are created equal. On this trigger, and this trigger, and this trigger, you had the support of blue and climbing. Now you got red and falling. So if you go long right here, from 37.85 up to red and falling, there is enough room to take a couple 3 points out of the trade, but you have to be careful because that red and falling can turn into resistance. So you have to be careful on this one. What you could do is you could wait for price to get on the other side of red and falling to then go long. You could even wait for this high to be taken out. Okay, this high was 37.92. So you could have gone long over here at 37.94, and it took you up to 37.98, so 4 points. Overcome this obstacle, nice 4-point trade. Price pulls back to blue and climbing. We expect that to be good support until proven otherwise. And then we catch this move up to 38.04. Another pullback. We get below blue and climbing, but we stay above the BBC. So we consolidate sideways. And then on this candle, as it gets above blue and climbing, you could go long. Once you get on the other side of blue and climbing, you could wait to take out this swing high, which gets you long about, maybe 38.05. Your weekly trading zone overhead, that's the final trade to target. So if you got in at 38.05, 10-point potential profit overhead. Now that specific trade, let me show you. Where did I put it? It would be, still checking. Hang on. Here we go. So that alert we're talking about to be long 37.85. Initial target's 87. Second target 89. Third target 3800. Fourth target 3806. Final trade to target weekly trading zone 3815/16. And notice how as price hit 3815, it pulled back. It hit the zone and then retraced back to 3812. We got a new candle. This candle, we made it through that weekly zone. Now we only have one weekly trading zone left overhead, and that's up at 3930/31. That's how you read the alerts. B is buy, T is initial target. On a long, potential resistance, second, third, fourth, final. And when you see an S, now this one, well, let me show you the one from this morning. Is that it? 3822. Okay, 3822. Okay, so buy 3822. Okay, going long at 3822. The target overhead. Initial target 3824. Second target 3830, then 50, 59, 85, and then the highest weekly trading zone. Same thing happened here. On this trade, on the initial trigger, it ran right up to 38.29. 7 points, $50 a point, $350 per contract traded. If you've earned the right to trade 2 contracts, then it's a $700 move. But then what did price do? As it approached the next target was 38.30, potential resistance. We made it to 38.29. And then price backed up, got below the trigger. So you were sitting here with 7 points profit. If you moved your stop to break even, then those 7 points disappeared. So how do you handle this dynamic? Again, in the morning, in the room, on the fast time frame, you move your stop to break even, and there's 4 ticks profit. Because you're only looking for 8 ticks on the trade. Okay, so you're very aggressive risk management. If you go back and study the last 6,380 something trades, you'll see this dynamic play out again and again and again. On every afternoon show, when I do the Concierge Trade Alerts, I show you trigger after trigger after trigger. It's just how markets work. So when you get the initial impulse move up through the entry, okay, as opposed to moving your stop to break even, I would suggest that you pick a spot where you're going to take profit, or you just move your stop loss right up behind price, because you're expecting it's going to do this. And so, put your stop, once you have, profit on the table, get that stop loss just 1 or 2 ticks behind price, because there's 7 points here. And so by putting your stop loss 2 ticks behind price, okay, you're going to give up a few ticks, but you're still out with 5-6 points profit. Then it gets back below the trigger. Now you're ready to trade again, and this time you're trading with the profit you earned on the first trigger. And so this time we get up through 38.30. The next target overhead is 38.50. $38.50. That swing high right there is 38.49. Okay. There's always a reason for everything. It's all based on logic. That's why we call it Logic 247. There's no secret, no mystery. Everything we do is logical. Once you understand how markets work, how we read price, how our indicators function with price, then when you look at a chart, you immediately know what price is trying to do. Like down here, once price closed above red and falling, actually I can back you up a little further. Okay, this is when price got above this week. We have a weekly zone at 37.50/51. When the zones come out Monday morning, you should get them on a chart. Okay, so they're in your face. The yellow lines are previous weekly zones last week. So price is above the BBC. Green line stands for bull bear cross. Above it we're bullish, below it we're bearish. So once we close above this weekly zone and we're above the BBC, we know that price is trying to get to the zone overhead. Now there's last week's zone, and look what happened when we hit last week's zone. Remember I said the previous week's zones hold sway over the market Sunday night, Monday, Tuesday. Usually by Wednesday they start to loosen their grip. But we consolidated for 1, 2, 3, 4, 5, 6, 7 hours. These are 30-minute candles. And then, but we stayed above the BBC. And as long as we're above the BBC, we know that price is trying to get to the zone overhead. So from 37.50 to 38.15, that is 65 S&P points at $50 a point. It's $3,250 per contract traded. From zone to zone, $3,200 per contract. We had some pullbacks along the way. but we never even spiked the BBC. So it was a very bullish move. But in the most bullish of moves, you're going to have retracements. You need retracements to keep the move healthy, whether it's up or down. What you have to be careful with is when you see a parabolic move, a move that just goes straight up without any pullbacks, that will usually collapse on itself. So we had a leg and a retracement. Leg. See how red and falling acted as resistance? Retracement. Leg. Retracement. Leg. Retracement. And then we got up to last week's zone at 38.30, and we've consolidated there now for 2.5 hours. Once we take out that swing high, then we'll have an opportunity to trade up to last week's zone at 59, then 85, and there's this week's final weekly zone at 39.30/31. If you have any questions about anything I've said, put them in the chat box, okay? Happy to answer them. So let's go back to our daily chart and get some perspective on where important resistance and support is. We had this move up that lasted since November. This red candle was the first red candle that closed below the BBC since October. Let me refresh the chart. There we go. So we closed below the BBC, first time since November, end of October, beginning of November. Now we hit the 24% Fibonacci retracement and bounced 30 points. The market closed right there for the session. And then the next session opened here an hour later. We went back down to the 24% Fib retracement. Buyers came in again, drove it up, and they kept driving it and driving it. They drove it all the way up. You can see it sticking up right there to red and falling. Resistance. Doesn't matter if we're looking at a daily chart or 30-minute chart or any other chart. The indicators, the philosophy, the principle, everything is the same. When we go from the daily to the 30-minute, we treat everything exactly the same. So we expect there to be resistance. At red and falling, there was. Sent us back down to close a second day in a row below the BBC. We closed here. We opened here. Now the high of this candle was 37.77, which you can see right there. So we opened, went up just a little bit, and then down we go. We traded through the 24% Fib, opened here, and then we dropped to this low right here. I had already drawn these on the chart. We knew to expect support at potentially this level, and it did give us a bounce. And then this level, had it kept going, it would have then been this level at the 38% and the low of this day right here. But buyers came in here, took us back up. BBC, potential resistance. So last night we were watching very closely to see if price would be able to get above red and falling on the daily chart. It did. It also got above the 24% Fibonacci price extension. Now we're dealing with this. We're on the north side of that trend line. We have a very bullish market on our hands. The next resistance overhead would be the high of this day, January 27th at 38.53. That's the high. And then the all-time historic high, intraday, 38.62 and a quarter. So based on where we are now, you should write down 38.53. Make a note on your notepad that there is major resistance there. If we get through 38.53, then your next major resistance is at 38.62 1/4. Now, if price can continue higher to this swing high, we'll most likely get some kind of a reaction to the downside. And when we hit the all-time historic high, we'll get a big reaction. And then the question will be, are buyers able to stay committed to their positions and put in a new all-time historic high? We're sitting at 38.33 right now. So we've got exactly 20 points to this resistance and 30 points to the all-time high. So with that said, we'll go back to the 30-minute chart where we're consolidating at 38.30. Now that was a logic alert from last night. We also have a different type of alert. Now the logic alerts come out around the clock 24/7. Could be 2 a.m., 2 p.m. We have traders around the world. Our day session is their night session and vice versa. If you don't want to be woken up in the middle of the night with a trade alert, just turn off notifications on your phone for Telegram. The CTAs, the Concierge Trade Alerts, this is forward guidance for the entire session. I try to get them posted as soon as I can after the Globex Open. Last night they came out 20 minutes after the Open. Two numbers, 3801, 3703. The way to deal with that is you go to the chart of the market you trade and you put a line in the sand at 3801. Okay, so the CTA on the long side, 3801. Now again, this is forward guidance for the entire session. And what that means is once price gets to 3801 and above 3801, we only want to be looking for long trade opportunities. If price were to get below the other number, 3703, which is way down here. 3703. 3703. Okay. So two lines in the sand. Now, the market opened, or this report came out at 6:20. So that's going to be 1820. Be the 1800 candle. That's the Globex Open last night. That began the Tuesday session. So if price had gotten below the BBC and started heading towards that number, then you want to be looking for short trades on the way down. And once you get to this number, if price can get below it, you're going to continue to look for only short trades. On the other hand, as price is moving up, and somebody asked a really good question the other day. They said, can we trade on the way to the CTA number? And that was just a really good question, because the answer is yes. Once you understand the methodology and the strategy, okay, you had a logic alert here, but even if you were just watching the charts and you didn't have the logic alert for whatever reason, I already explained, as price got above red and falling and took out this swing high, you want to be long, right? Now, this is not unusual here. because the CTA numbers are important prices, important areas. That's where the market has to make a decision. Price will often walk right up there to the number, take a look around. If it doesn't like what it sees, it'll back off and then take another run at it. This is forward guidance for the entire session. The CTA numbers are good for the entire session. Okay. Now let's look at the Dow. CTA last night for the Dow was 3325. I get one of those keyboards that doesn't make any clicky clacks. 3325. So we got to the important price, important area, consolidated for hours just above it. Now from 325, we put in a swing high up at 86. So that's 60 points at $5 a point. That's a $300 per contract move. And you'll see that it triggered, got back below the trigger, triggered again, got back below the trigger, triggered again. Now, on this chart, this number is a current weekly trading zone. This is a current weekly trading zone. This is not. Okay, so I'm going to take this one out, and this one out, this one, this one. 29,950/55. Okay. So 3645. That's from last week. So I'm going to make that yellow. And that is last week. So we're going to make that yellow. I'm going to leave it on my chart because it's still early in the week. And then the next weekly trading zone from this week is 3820. So from 325, we've traded up to 725. It's 500 points. $5 a point with one contract. This is a $2,500 per contract move. Two moves like that with one contract will pay for this. Lifetime membership, no monthly recurring fees, no access fees, no made-up fees, no upsells, no discoveries that you just got to have, no more modules to purchase. One-time payment, $5 grand, $49.97. And that trade I just showed you on the Dow, from the entry to where we are now, two of those trades, or one trade with two contracts, pays for the passport. Now, please hear this part. We do not want you trading real money the second you join. No matter how much you like us, no matter how much you admire what we do, you must trade in sim until you understand the strategy and the methodology. In fact, you get a 24/20 blueprint, it's called, which teaches you how to write your business plan, your trading plan, and it also helps you to go from 1 to 20 contracts over a period of 24 months. But before you go live, the blueprint is going to require you to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. 10 consecutive days in a row where you reach your goal, 10 trades or less. Once you do that, the blueprint gives you the green light to go live with one contract, just one. Now your goal, because you're trading real money, is to increase your account balance, whatever it is, by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. Beautiful thing about the second contract is you're adding it with profit you earned in the market. You'll trade 2 contracts for a while. The blueprint will notify you when it's time to add number 3. You only add 1 contract at a time, and you only add additional contracts with profit you earned in the market. You have access to 2 hours of live training every day, Monday through Friday, every trading day. 2 hours, 9:30 a.m. to 11:30 a.m. Eastern. It's an interactive environment where you can ask questions, you can watch Michael trade, and you should be putting on and taking off trades yourself in your demo account in the simulator. That's how you learn. You got to get in the pool if you want to learn how to swim. Excuse me. If you just sit and watch, you're not going to learn how to trade. If you watch Mark Spitz's videos of him swimming, he's a great swimmer, maybe one of the best. Doesn't matter how many of those videos you watch, when you get thrown in the deep end of the pool, you're going to sink like a rock. The only way to learn how to swim is by swimming. The only way to learn how to ride a bicycle is by getting on the bicycle. Yeah, you'll fall down a couple times. But the good news is you're trading in the demo account, so when you fall down, it might hurt your pride, but it doesn't hurt your pocketbook. 10 consecutive days in a row before you think about going live. Not only do you have the training in the morning, you have this session in the afternoon where we bring all the pieces of the pie together. And you have access to the discussion group 24/7, 365. The discussion group is in Telegram. It's a very friendly and encouraging environment. People share their charts. We have another channel, the Breeze channel, where we just talk about things other than trading. When people have a nice trade, they post their chart. They're not bragging. They're doing it to encourage others. And when somebody has a good trade, guess what? Encouragement. This is a very positive, uplifting environment. And even on the trial, you have access to this discussion group. And you can scroll up and scroll up. There's, I guess, a couple years worth of posts in there. So when you have a question and need help, you don't have to wait for the room to open the next morning. Just go to the discussion group, post the question. You can always email us, you can always call us, but the fastest way to get an answer is in Telegram, because there's always somebody hanging out there. We all trade the same method, the same strategy. So if I'm not around, Valerie's not around, Michael's not around, one of the other traders in the room who learned the strategy that you're now learning, they can answer your question 99% of the time. Okay? So this is that line I drew back last week. It was on this day, right after the market opened, I drew this line. Above it, we want to be long. Below it, we want to be short. And shortly after I drew it, the bottom fell out. We're now approaching that area. Important prices, important areas are almost always tested. So we're going to see this area tested. What happens? Either we run into resistance, we get another leg to the downside, and we expect the BBC to be good support, or we take out this high and then take out this high, and we expect to move up to the 78% Fibonacci price extension, which is at 38.78. Okay. All right, we looked at the Dow, we looked at the S&P. Let's take a peek at the Russell. The Russell had some challenges getting going this morning. It was lagging the other markets. The CTA last night for the Russell was long 2132. Okay, and from 2132 we ran up to the zone at 46. 14 points at $50 a point. $700 per contract traded. Important prices, important areas. Back below the trigger. Do it again. If you watch closely, you'll see this over and over and over. Trigger, profit, trigger, profit, trigger, profit. This first move here, I got a swing high at 35.9, call it 36, back below the trigger, off we go again. And then when we hit the weekly trading zone, we found resistance. And when price can go no higher, you'll see there's even a little doji there. And so the doji sent us back to last week's weekly zone. When we drop to a zone, we expect support. And that support took us back up to the resistance at the zone. Now, 2099 is a this week zone, and 2146 is a this week zone. So that is 47 Russell points. 47 times 50. $2,350 per contract traded from zone to zone. Zone to zone. 2 contracts. Pay for your passport. In queue, next on the list. Okay. CTA last night for the NQ was 13,320. Okay, 13,320, and then we had a zone at this week's zone at 352. So from 20 to 52, 30 points, $20 a point, $600 per contract traded. Back below the trigger. Did it again. This time we didn't quite get back below the trigger because the BBC got in the way, and we expect that to be good support, and it was. And so now we've gone from the 352 zone up to last week's zone at 464. From 52 to 64, from 352 to 464, that's 100 points. $20 a point, $2,000 per contract traded. From here to here. Next on the list, crude oil. Okay. Our highest weekly zone this week for crude is 55.90. There's a zone at 53.80/85, and below that is 53. So this move from zone to zone, from 53 to 53.80, that's $800 per contract traded. From 53.80 to 54.80, right there, that's $1,000 per contract move. The CTA last night for crude was 53.95. 53.95. And so the initial trigger took us up to $200 per contract traded. Got back below the trigger. And from 53.95 we went up to 54.30. So that's $350 per contract traded. And then we got back below the trigger again. And this time we went from 53.95 to 54.95. That's $1,000 per contract move plus some. Here's gold. CTA on gold last night, consider being short 18.55. We have a zone at 56.57. So if you got short per the alert at 18.55, the next zone on the way down is 36.37. So from 50, let's, for the simplicity of math, 57 to 37, it's 2,000. This is basically a $2,000 per contract move. You had the initial drop, which took you down to 18.45 and change, call it 46. So the move was from 55 to 45. That's $1,000 per contract. Price got back above the trigger, see it right there? Found resistance at the BBC, and then dropped $2,000 per contract traded. And our day wouldn't be complete without a look at silver. Now, earlier I mentioned a potential double bottom in place. This was an important price, important area. We've traded through it. So, where might we next find support? We're almost there. You could say we are there. If that doesn't hold, right there, and then see that little bullish cross. So on the way down, you could trade all these windows of opportunity. If we get below this, and there's a nice little area there. If we get below this, nice little area here. The CTA last night for silver was 28.53. So from 28.53 to 27.53, that's $5,000. We've dropped to 26.53. That's a you're looking at a $10,000 per contract move. Silver's very volatile. You've got to be very, very careful. Okay. While it's worth $10,000 if you're on the right side of the trade, well, it'll cost you that much if you're on the other side. And there you have it. Around the world. Yeah, Mike, still waiting. Mike asked if there's any word on SFEG. Yes, we're still waiting for it to be relisted. Also, Dodge, which has been in the news of late, is at a 62% Fibonacci retracement on the daily chart. And I mentioned a stock back in December, a vaccine stock that had my attention. Vaxart. I kind of forgot about it, and Stefan reminded me. I brought it to your attention around $7, and that's where I got involved with it, around 7. And this is one of those parabolic moves. I wish the thing would pull back, find support, take us to the next leg. I mean, how long can it go parabolic? As long as it does. There's no concrete rule of thumb, but these kinds of moves don't last. Eventually, there's going to be a retracement. So if it were to retrace from right here, just back down to the beginning of this particular move, right there. 24% Feb retracement, 38, 50, 62. So we're at 19 bucks basically. You know, a retracement back to $13 would keep this thing healthy and give it the energy for another leg to the upside. Okay. CryptoInfoDaily.com. Hopefully we'll be back online tomorrow. Had some real issues getting the site working again, but a lot of you see stuff that I post in Telegram from Cointelegraph. Our site is a news site as well, and so I'll be posting from our site going forward, and hopefully it will be up and running today. And thank you, Lee, for helping me find the guy to get the job done. Yesterday we talked about strength through sharing. Today we'll talk about sustaining grace. 2 Corinthians 12:9. But he said to me, my grace is sufficient for you, for my power is made perfect in weakness. Therefore I will boast all the more gladly of my weaknesses, so that the power of Christ may rest upon me. Valerie just sent me a new recap. Or is that the same one? Oh, yeah. Well, hang on, I'll share it with you. Give me 1 second. A couple changes. Stand by. Okay. Thank you very much, Valerie. Okay. So, this is where we were at the start of the show. This is where we started the show, and here's where we are now. 35 total alerts issued since Sunday night at 6 p.m. Eastern. 11 never triggered, still waiting on 2. We've had 22 actionable alerts so far. 1 got stopped out, that's 5%. Not a typical week. On a typical week, 20% get stopped out. Not based on an 8-tick stop, based on not risking more than $300 per contract per trade, less when possible, using market structure and our simple 3-step method. Okay, back to the good word for the day. My grace is sufficient for you. 2 Corinthians 12:9. Now, what is grace? Unmerited favor. There's 2 kinds of grace. There's saving grace and sustaining grace. Saving grace is the moment you place your trust in Christ, God expunges the entire record of your sin. Scripture says he sees it no more. Second type of grace is sustaining grace. 2 Corinthians 12:7, Paul writes, I was given a thorn in my flesh. 3 times I pleaded with the Lord to take it away from me. But he said, my grace is sufficient for you. My power is made perfect in weakness. Now that's some pretty vivid imagery. A thorn pierces the soft skin and lodges beneath the surface. Every step is a reminder of it. The child in the rehab center, the red ink on the ledger, the criminal offense on the record, the the craving for alcohol in the middle of the day, tears in the middle of the night. And so we cry out, Lord, take it away. But what you hear when God speaks to you is this: my grace is sufficient for you. Sustaining grace promises us not the absence of a struggle, but the strengthening presence of God. Becoming a Christian, a believer, doesn't mean there'll be no more storms in your life. It simply means that you can now have peace amidst the storm. John Newton, the Anglican clergyman and former slave trader who wrote Amazing Grace, found that God's grace was sufficient. On the day his beloved wife Mary died, he found the strength to preach a Sunday sermon. The next day he visited church members and later on officiated at her funeral. Now let me say that again. On the day his wife died, he found the strength to preach a Sunday sermon. The next day he went on visitation rounds with church members and then preached her funeral. Looking back, he wrote, "The Bank of England is too poor to compensate for such a loss as mine. But the Lord, all-sufficient God, speaks, and it is done. Let those who know him and trust him be of good courage. He can give them strength according to their day. He can increase their strength as their trials increase." And what he can do, he has promised he will do. And that's our good word for the day. If you're on the trial and you're ready to become a member of the family, go to EminiFuturesTrading.com. It's up on the screen. EminiFuturesTrading.com. Or call Valerie at 949-42-EMINI, or send an email to support@cfrn.net, or install Telegram and get an instant response. Just go to telegram.org, put it on your phone, put it on your tablet, put it on your PC or your Mac. If you've never taken our trial, go to eminitrainingschool.com. Once you sign up for the trial, you get a confirmation email, click the link, and then Valerie will send you all the important information that you need to take full advantage of the trial. Now, the trial is not just you coming and hanging out in the room and watching Michael trade for 2 hours. That's a start, but it's a small part, okay? Now, it's up to you. Do you really want to learn how to trade? I know that many of you are beaten up, battered, broken, bruised. You've been through so many doggone things and watched so many videos and downloaded so many indicators and spent a ton of money, right? I wish I could change the past for you, but I can't. What I can do is promise you that going forward, it'll be a very different experience. Live instruction every day. You'll start trading immediately in your demo account, in your simulator. You won't have much of a clue what you're doing at first, but that's okay. The more you do it, the more you'll get clued in. And it'll get you to the point where you are able to ask the right questions. You can never get the right answer by asking the wrong question. By getting in there and getting involved. And I'm having problems with this symbol. This demo account. I tried to do this and it did that. Oh, here, let me show you. Well, then I tried to do this and that happened. Okay, well, let me show you. See, it's a process. Welcome to the process. So, ask yourself, do you really want to learn how to trade? There are many other ways to earn a living. Trading is not easy. I do believe with everything we've put together here, with the help of Bert and of course Valerie and Michael and everyone that's involved. I really think it can be simple, but only if you focus. You have to do your part. I mean, we're not going to come over to your house and trade for you, but we will teach you how to do it if you want to learn. So, ball's in your court. If you're ready to become a member of the family, go to eminifuturestrading.com. If you want to take the trial because you never have, go to eminitrainingschool.com. Thanks so much for tuning in today. Nope, somebody's sending me a message. What's up? Oh, there's Garrett. I forgot. Garrett was coming on today. Whoa, Garrett, how long you been here? Let me open your mic. I'm sorry. Completely slipped my mind. Hang on, I'm opening your mic. I just saw that thing blink. Did he already leave? Aww. Now that's... unbelievable. I missed that. Usually Valerie or Michael will mention. Guys, I'm so sorry. Garrett was supposed to be here today, and I never saw him. So, I can't turn back the hands of time. I'll call him and apologize, and we'll get him on later this week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.